Hello traders and welcome to the channel again. My name is André Cardoso. Thank you for being here. It's always a pleasure to share my work with you and my insights. And for today my insights are related with the Forex market, the gold and silver. We have also crude oil with a nice reaction to the downside. And let's start with the captain of the ship, the Dixie, the dollar index, which has formed the bullish scrap pattern at 104.90. Golden Fibonacci extension level as predicted last week. We saw the potential formation at these levels, but I also called your attention to the golden Fibonacci retracement placed just a few points below 104.80. This is the 61.8% Fibonacci retracement level, converging with nothing more than the default target for the edge and shoulders pattern formation printed above. So at this point I will expect a move to the upside, a bounce towards the 38% Fibonacci retracement as mentioned before, after the formation of the shark pattern, of the crab pattern, that's correct. We expect a move towards the 38% Fibonacci retracement level. Of course, for that to happen, we should see the euro versus the dollar trading lower. We have new fractal resistance at 108.45, just a few points below the 47 projected before as a bearish shark pattern completion point, 224% Fibonacci retracement level. This specific pattern usually targets the 38% Fibonacci, the 50% Fibonacci retracement level. We should also consider, of course, for position management strategy, we should also consider the 38% Fibonacci retracement level, for a simple fact that is also converges with the previous fractal resistance 107.77. That's the 38% Fibonacci level for the euro versus the dollar, the fiber. Also the cable 88.6% Fibonacci retracement level projected last week at 128.32, bearish but pattern completed. We expect nothing more than a reaction to the downside after the formation of this pattern towards the 38% Fibonacci retracement level, 127.57. If you go into a lower time frame, eventually you should be tracking also the eventual edge and shoulders pattern. We are now facing or threatening the support level for the Great British Pound. Moving forward, Aussie, we projected before the bearish crab pattern at 67.77. We have a new fractal support, a new fractal resistance at 67.61. I will expect a reaction to the downside very similar to what I do expect for the euro and the pound, related of course with the potential move to the upside for the Dixie. If that happens, I will not expect nothing more than a pullback for the Australian dollar, eventually a retest of these previous resistance levels, 67.04, 66.89, previous fractal levels right there, and the 38% Fibonacci retracement converging with the previous daily fractal resistance for the Aussie. The Kiwi already reacted to the pattern that we projected last week, the bearish shark pattern at 61.45, already facing support, already found support at the 38% Fibonacci retracement level, 61.12. The default target for that pattern, as usual, the 50% Fibonacci level, 61, back to the previous fractal support, the intraday fractal support level. That's the ultimately the default target for this bearish shark pattern completed for the Kiwi. Now let's jump into the Aussie versus the New Zealand, another one that we should be paying attention to. Potential pullback from this price zone will not be a surprise. We have nice signs of bearish divergence emerging on RSI. We have also the previous monthly fractal resistance at 110.30 and we may see a reaction to the downside, and if that happens, we should pay attention to the potential formation of the cup and handle pattern formation. So that being said, I will expect nothing more than the formation of the handle, which may search for support at those Fibonacci levels, 23% Fibonacci level at 109.46, most important 109.02, the 38% Fibonacci retracement level. This level will be crucial if the price approaches those levels, obviously. Of course, if the price breaks above the weekly fractal resistance, that should also trigger more, at least more moves to the upside, even without completing or without forming that cup and handle pattern formation. Dollar versus the Canadian also posted last week the potential bullish shark pattern at 35.87. New fractal support at 98, at 35.98 exactly, and we are now threatening, actually we are rejecting the new fractal resistance, intraday fractal resistance at 36.47. It looks like a potential flag pattern emerging right there after a nice bounce to the upside. I will not be surprised to see let's say a small move to the upside, eventually just searching for the 50% Fibonacci retracement level, even though if the price breaks the support levels, that will call my attention for the potential bullish shark pattern. And this one it's very interesting because it may also reinforce this descending channel and its structure support line. So that being said, pay attention to or a breakout above the resistance, which may trigger a small move to the upside, eventually searching for the moving average, or a violation of the support, which should trigger a move to the downside. And if that happens, pay attention to this 35.22, the 224% Fibonacci extension level for the dollar versus the Canadian. And because we are now talking about the dollar versus the Canadian, let's also talk about the crude oil. We have a bearish cipher pattern completed at 84.64. I shared this one on Twitter, and if you are not following me on Twitter, I invite you to do so, because I share a lot of patterns there and charts on Twitter. But I shared this bearish cipher pattern once completed at 84.64. We expect a move towards the 38% Fibonacci retracement level placed at 80.16. Basically, we expect a retest or a threat to recover the weekly fractal resistance level. When I say a threat, it's because usually the price will threat to recover those levels, but then eventually starts to bounce again. So this price behavior will put a lot of people trying to short the markets. So, and eventually the price will search for support at the 38% Fibonacci level right below the support and starts to bounce again. Observe these moves. Ultimately, 38% Fibonacci retracement level for the next support for crude oil comes at $80.16. Now, going forward into the dollar versus the Swiss franc, nice structure to the downside. I see this as a potential parallel channel to the downside. We have a new range to consider between 89.40 and 89.93. So this is basically the intraday range for the pair. Nothing more to report after failing the completion point after failing the completion of the formation of this bearish shark pattern at the golden Fibonacci level. We saw the price starting to pull back. For now, there's nothing more to report. Of course, it will follow the Dixie. If the Dixie starts to bounce and trade higher, probably we will see a violation of this weekly resistance again, and again the price may threat the previous fractal resistance at 90.50. 50. Dollar versus the Norwegian krone. I posted last week and I shared it here in the channel the potential reinforcement of these channel support. Actually not a channel but a wedge. This ascending wedge, eventually the reinforcement or the breakout below this structure. We saw the formation also of a bullish shark pattern at the golden Fibonacci level, converging with that reinforcement of the previous or this potential descending channel, this potential ascending wedge, that's correct, and it's now reacting to the 50% Fibonacci retracement level. As I said multiple times, this completes a sequence, the 5-0 sequence, 50% Fibonacci level. We expect a reaction to the downside from this price zone. We saw already a move to the downside. Actually, we have new lows of the session at 10.57 after retesting these levels here. So basically we're still inside these, what we may consider this wedge pattern formation for the Norwegian krone. Nothing more to report, at least for now, unless it starts to unfold in other patterns, and we will be here for sure to track them. Dollar versus the Mexican peso. We keep tracking this bearish momentum for the Mexican peso after finding resistance at the golden Fibonacci level. I called your attention to this potential move, and actually we have a symmetrical projection already here, and of course that points to the reinforcement of this parallel descending channel and its trend line support. So if the price keeps trading lower, I will not be surprised to see this structure support offering pressure again, and eventually the price will start to bounce from there. For now we are approaching the weekly fractal 1785. That's the weekly fractal support level to consider. A violation of these levels should also trigger more moves to the downside. Euro versus the pound, another pattern that I shared with you in the channel, 84.96, bearish shark pattern completed, 200% Fibonacci extension, edge and shoulders, default target achieved, also just a few points above, and that's what we have for now. We are facing the 50% Fibonacci level, another level to consider for a potential bounce from this zone. 84.47, 84.35, you have the golden Fibonacci, the 61.8% Fibonacci retracement level. This range should offer support. If not, you will see the price retesting the lows again. But this is the range that we should always consider, between the 50%, 61.8% Fibonacci level, specifically after the formation of a bearish shark pattern and reversal with the bullish shark pattern. We should always expect 50% and the 61 to offer resistance. Moving forward, Euro versus the New Zealand, very similar price behavior. Instead of a bearish shark pattern, we have a bearish alt bat pattern completed at 177.43. Push to the downside, 38% Fibonacci retracement, again default target for the pattern, offering nice support. We have a new fractal at 75.84. That's the range that we should consider for now. Daily support 75.84, 77.46, the daily resistance level. That's what we have. Eventually we may consider the formation of a symmetrical 5-wave structure to the upside. First wave, pullback to the second wave, the third wave, the largest one, a pullback without breaking the highs of the first one, and then the symmetrical projection of the first wave as the fifth wave. So that points basically or roughly to the 178.06. A new higher high is required in order to complete that sequence. If the price breaks below these support levels, eventually we are talking about an ABCD pattern or an ABC correction, 1, 2, 3, an ABC three-wave structure to the upside, and then the market will trade the direction of the previous swing, which in this case is to the downside. Only time will confirm that. Pound versus the Aussie range to consider: 190.44 as resistance, 189.40 as support. Nice bounce from the golden Fibonacci retracement level, important level to consider. We have also the moving average exerting some pressure to the downside at this point. Attention to this structure, in particular the daily fractal support. A breakout below these lows should trigger moves to the downside. In fact, we have already something that we can use to track the potential move to the downside. If that happens, we will track a move towards the golden Fibonacci extension level, in this case projected at 88.98. We will talk about that pattern later if it starts to unfold. We are talking about a potential bullish shark pattern projected at the major support level. Pound versus the New Zealand, also threatening major resistance. Daily fractal resistance level 2.0939, eventual false breakout of resistance now starting to unfold if the price breaks the support level. The support is positioned at 207.95, so only a violation of these lows will confirm the false breakout above. For now, we are tracking the potential pullback for the pair, or the eventual formation of a new bearish shark pattern at 224% Fibonacci extension level. If that happens, we will also pay attention to how the market will react from there. Let's observe. For now, we are threatening, as I said, we are threatening the resistance level. Daily fractal at 209.39. We have daily support at 207.95 to consider. In order to anticipate a move to the downside, let's also adjust our Fibonacci retracement levels just to identify those potential pullback zones. 38% Fibonacci level, 208.12, and then 207.21, the golden Fibonacci the golden Fibonacci retracement level is 61.8%. So for now we are tracking the potential pullback to the previous support, the daily fractal support level, the 38% Fibonacci level. Let's finish with silver and gold. Silver, nice. We have a new fractal resistance at 31.49. This is also the 61.8% Fibonacci. At least we need to consider the 61 because the market did not touch the 78.6. So I'm considering this as an element of pressure, the golden Fibonacci level on silver. And we have patterns projected above at 32.25, I guess 32.25. Let me try to draw this pattern for you. So I shared this pattern last week, the eventual shark pattern on silver, and of course that requires new higher highs and the formation of the pattern above. It's still one of the possibilities for silver. I will not be surprised to see that happening if the price rejects. Actually, we have already a new fractal support at $30.41. If the price rejects the idea to trade below this fractal support, at some point it may scale to these levels and approach the previous and monthly fractal resistance level. That's my expectation. I want to see a retest of these highs again on silver, and if that happens, I will expect the pullback. The pullback that I will expect is based on this specific pattern, and this specific pattern calls for a 50% Fibonacci retracement. So once the price completes the sequence, we expect a retracement back to this fractal support again, actually nailing the previous low and fractal support level again. So pay attention to this pattern on silver. If the price pushes, if the price prints this very sharp pattern, we will expect the push to the downside after its formation. The same may happen for gold, but we are far away from that pattern to complete, which comes at which comes with a retest of these previous highs. We need to wait for that to happen. We are far away from this move on gold, and in fact one of the other patterns that may start to emerge, and it's more clear on gold than on silver. It's a head and shoulders pattern with a new fractal support at 2350. So this is kind of head and shoulders pattern. I'm trying to pick to the left shoulder, and the reinforcement of the neckline with the new fractal support. We may be facing the right shoulder at this point. So basically, let me also try to project this for you. Let's change into a line chart, and let's measure this potential pullback towards the 38% Fibonacci level that points to precisely to 2316, 78.6% Fibonacci retracement level, actually 78.6% Fibonacci level, between those levels for sure. 71.61, so 23.16 actually. Let me delete also these levels that we don't need. 23%. So those are the Fibonacci levels for gold, and let's see how the market will react from here. So we have the 38% Fibonacci level acting as element of support, actually reinforced with a new fractal at 2350. The formation of the right shoulder, and if the price breaks below these lows, we will expect a move towards 2316, the 200% Fibonacci extension level, basically back to the shoulders of the previous head and shoulders pattern formation. So that's all for today. I hope you enjoy, and I hope you take some useful information from these data. Stay well, have a nice trading week, and I hope to see you in the next video.